Let's talk about Palantir Technologies, stock symbol PLTR. The company just reported earnings after the bell, and it beat expectations, coming in at 13 cents a share on the earnings. However, the stock is slipping after hours. So what is that all about? I'm going to dive into the technicals. I'm going to dive into the charts. I'm going to analyze where the key support and resistance levels are and try to forecast what we can expect from the stock going forward. So let's go ahead and dive into that right now. First off, let's talk about this huge run-up off of the April lows. Stock has nearly doubled in value off of these lows, and it's done so in a very short period of time. It's really become overextended, and going into the earnings, it was priced for perfection, trading right there at its all-time highs, also potentially creating a double top scenario here. I know a lot of people don't want to hear that. People are very bullish on this stock, but that is something that we're going to want to pay close attention to going forward. Now, there's a couple of trend lines that I want to draw out for you guys here because I do think that they're very important for the stock going forward. The first one is this longer-term trend line. This goes back to August of last year. Now, if we create a parallel line, it also gets even more interesting because what you have here is resistance before, back in late last year, finally broke through that, pulled back to that broken resistance, bounced off of it, came back down to it again, bounced, came back down to it again before ultimately succumbing and then recapturing. So both of these layers, they're parallel lines. I haven't altered them at all, but they have been very exact in providing key support levels for the stock. So obviously, if we break below this level right here at around, if it pulled back to, let's say, 87, then the next level of support would be around $80 per share. That is possible for this stock. I mean, you consider how much it was able to fall. You look at it from a monthly chart, and how often can you say a stock can drop 33% off of its highs in a month and it's still up on the month? And that's what PLTR did. It has been on an incredible run going all the way back to June of last year with only one down month there in March. But it's extremely volatile. There's a lot of FOMO. There's a lot of people jumping into the stock, and it creates a huge risk for there to be a blow-off top here. Now, in order for this double top to confirm, it would have to drop substantially. And so you have this support level right here, which we'll go ahead and give it a different color so it just doesn't blend in with those other yellow lines. We'll give it white. If it drops below the 67 level, then you would have a confirmed double top. That would be huge development for the stock and would be very bearish going forward, likely creating a scenario where it could get down to the 45s. Now, I'm not saying that's where it's going. What I'm trying to do is map out the different scenarios for you to be able to decide for yourself what you can expect from the stock going forward. And if one support level breaks, then you want to know what's the next support level that you want to be following. Another thing that I would point out here to you too is that this 200-day moving average, okay, this has been a huge magnet for the stock over the years. Now, back in August of last year, when we had those August lows that were formed, this stock went completely bonanza, and it's never tested it since. It's become extremely detached from that 200-day moving average. And so the scenario does exist that it could be coming back down to this level at some point down the road. Now, that 200-day moving average, it's starting to steepen quite a bit. So while it's at 65 right now, it could be at $80 in a month. And so if it did pull back, it would be a different scenario in terms of where it would pull back then versus where it could pull back to right now. You also have, and I hate to call this a double bottom, but it kind of has that double bottom look to it in a sense. First bottom and then second bottom. Now, why do I actually consider this a double bottom? Because essentially where the stock was closing at during this time was right along the same lines as this level here. You had this huge shock event right here that kind of negates the whole, from a textbook standpoint, it being a double bottom. But in essence, that's really what we're dealing with. So the double bottom, it actually confirmed already, broke out here back on April 24th, and it's been off to the races ever since. So this whole pattern's played itself out, but what you may still see is another pullback down to this level. Now, let's put the earnings on here now. Earnings, we're down to 113. It's down almost 9% after hours. This is a significant pullback that's starting to get underway, but even still, even with the 9% pullback, it's still trading above the 10-day moving average, which is absolutely nuts. Good chance that that's going to break tomorrow, but I also, at least from an intraday standpoint, but I expect, because this is such a huge retail favorite, I do think that there will be some FOMO at some point tomorrow to where people are going to want to try to buy the dip, thinking that maybe this is as low as it gets and this is my opportunity to get into it. Retail has been very, very risk adverse. They've just really thrown risk out the window. They don't care. And so they're piling into everything they can because since 2020, when the market sold off back in March of that year, everybody has been rewarded consistently from buying the dip. And so this is really no different now, where people are seeing every kind of a dip as a buying opportunity, especially with considering the run that we've seen out of a lot of stocks like PLTR off of the April 7th lows. So that's where it could pull back to. Now let's look at the weekly. You can see a little bit more clearly defined where this double top has formed and the potential for where it could go down to. Now, you could also say as well that it's somewhat range bound, and it's a very big range, but it essentially is range bound. It can't really break out of this massive range that tops out at around 125 and goes all the way down to 65. So from the bottom of the range, it has about a 100% move opportunity to the upside, while from the top of the range, it has about a 50% move to the downside. So it's a huge, huge range that the stock is trading in. But nonetheless, you can see where it's bottomed twice here on the bottom and topped out twice at the top of this range. So this is a range bound stock in that larger long-term view. From a monthly standpoint, again, you can see where price continues to melt higher. But if this weakness holds, and we're talking about a potential top in the stock, there is the potential for us to start moving down to price levels like 99 or 87 or even 80. If it starts to get beyond that level, we can address that at a different time. But right now, this stock is becoming very vulnerable because it's going into earnings priced for perfection. Now, would I be personally getting into the stock? Not a chance. No way. I think the stock is way overvalued as it already is. It's got like a PE ratio of over 400. I don't know necessarily what it is post earnings, but going into it, it was like PE of 400. That's absolutely crazy, especially in the environment that we're trading in. So I do think that there's a lot of opportunity for it to come back down going forward. Even if I wanted to swing trade this stock, I would have to give this company maybe about 3 to 5 days to calm down and get an idea for where it wants to settle down at, and hope that it can start creating some kind of a bottoming pattern as well. And hopefully it can do so at a much lower price to give a better reward risk opportunity. This is going to be a very difficult stock to manage the risk on because, one, you have some pretty extreme market conditions that we've been dealing with over the past few months. Plus, this is a very high beta stock that can really whipsaw traders all over the place. If you enjoyed this video, make sure to like and subscribe and let me know down in the comments below. What is your opinion of PLTR post earnings? Is this something that you're loading the dip on this 9% drop? Or are you going to wait for a much broader pullback like what I suggested? Thank you guys, and God bless.